What if I told you that central banks are quietly hoarding gold at record levels while telling you to trust paper money? Welcome to Timeless Finance. Today, I'm inviting you to explore why the world's most powerful financial institutions are stockpiling gold like never before. But first, I have a quick question for you. Comment down below and tell me what country you are in and what time is it for you right now. I am really interested in seeing just how global our community is. Now, let us get into it. Gold is making a comeback. Central banks from China to Russia to India are buying more gold than ever before. This is not a coincidence. After decades of downplaying gold in favor of fiat currencies, something fundamental has changed. Why are these institutions hoarding a metal while the global economy drowns in paper money and digital assets? By the end of this video, you will understand what this means for you, your savings, and the future of money itself. For centuries, gold was the backbone of money. It was not just a shiny metal, it was real, tangible wealth. Unlike paper notes that can be printed endlessly, gold has a finite supply. That scarcity gave it intrinsic value. Even today, despite the rise of cryptocurrencies and complex financial instruments, gold retains a psychological and financial status that nothing else can replicate. During the 20th century, gold became secondary. The Bretton Woods system tied the US dollar to gold, but by 1971, the United States abandoned the gold standard entirely. Paper currency became fully fiat, meaning its value depends entirely on trust in governments and central banks. For decades, the focus was on debt, interest rates, and inflation targets. Gold was treated as a relic, a hedge for those who distrusted the system. Fast forward to today, inflation has returned with a vengeance. Debt levels are unprecedented. Governments print money to cover deficits and stimulus packages. Digital currencies dominate headlines, but the underlying financial infrastructure is fragile. In this climate, central banks are returning to gold as a safe haven. Take Russia as a prime example. Over the past decade, the Russian central bank added thousands of tons of gold to its reserves. Why? Geopolitical stability. When international tensions rise, paper assets fluctuate wildly. Access to foreign currencies can be blocked through sanctions. Gold, however, is universally recognized and immune to political manipulation. By holding gold, Russia ensures it has a tangible asset for trade without relying on potentially hostile financial systems. China is another major buyer. The People's Bank of China steadily increased its gold reserves, signaling that it views gold as a cornerstone of long-term economic security. By holding substantial gold, China reduces dependence on the US dollar and strengthens its position in potential economic disputes. Even countries like India and Turkey are now accumulating gold. This is not just about hedging against inflation, it is about reducing vulnerability. Gold acts as insurance against currency devaluation. Global gold production is limited. Mines produce a finite amount each year. Recycling existing gold is expensive and inefficient. This scarcity adds to its appeal as a long-term store of value. Central banks recognize they are competing for an asset that cannot be printed or manufactured. As demand rises, the price inevitably increases. Now, let us talk about what this means for regular people. When central banks hoard gold, it is not just an abstract financial move. It signals that these institutions are preparing for potential instability. For investors and savers, this is a warning sign. Inflation may rise, currencies may weaken, financial markets may face volatility. Individuals with little exposure to gold or tangible assets might find their savings eroding in real terms. This is also changing global dynamics. Countries with large gold reserves have options in negotiations, trade deals, and financial crises. Those without gold are more vulnerable to currency shocks or sanctions. Central banks are not hoarding gold purely as an investment. They are accumulating economic power and resilience. Gold buying by central banks directly impacts global markets. Increased demand pushes prices higher. When gold prices rise, investors seek protection in gold-backed assets, exchange-traded funds, and mining stocks. This creates cycles where gold becomes both a defensive asset and a speculative opportunity. There is also a crucial historical lesson here. Throughout history, periods of fiat money expansion, economic crisis, and geopolitical tension have coincided with increased gold accumulation by governments. The Roaring '20s, the Great Depression, and post-World War II Reconstruction all saw central banks prioritizing gold in times of uncertainty. The patterns today mirror those periods. Gold is returning to the center of finance not by accident, but by necessity. Central banks understand what most people ignore. Money is only as reliable as the system behind it. Fiat currencies can fail, debt can spiral out of control. Digital assets can fluctuate wildly. Gold is real, finite, and universally recognized. Watching who holds gold and how much they hold offers deep insight into the health of the global financial system. The renewed focus on gold is tied to structural weaknesses in the global financial system. In a world dominated by debt and complex derivatives, trust in currency is absolutely critical. Fiat currencies rely on faith that governments and central banks will manage economies responsibly. But when debt to gross domestic product ratios are at historic highs, deficits widen, and money printing accelerates, that trust erodes rapidly. Gold has stood the test of time. It is immune to the actions of individual governments, and its value cannot be artificially created. Even the U.S. Federal Reserve, despite holding the world's largest gold reserves, quietly acknowledges the importance of diversification. When global investors question the value of the dollar, gold serves as both a literal and psychological safeguard. Gold also provides liquidity in crises. Unlike many financial instruments, it is universally accepted and can be converted into cash or used for international settlements without legal or political barriers. This makes it a strategic tool during geopolitical tensions, trade disputes, or sanctions regimes. Another driving factor is currency wars. When nations compete to weaken their currencies to gain trade advantages, gold becomes a safe haven. This is clearly visible in China's consistent accumulation. By holding reserves in gold, China hedges against fluctuations in the dollar, euro, or other major currencies. Gold acts as a buffer against both domestic inflation and international currency volatility. The psychology behind gold should not be underestimated. Humans have assigned value to gold for thousands of years, and that value persists today. In times of economic uncertainty, investors and governments alike turn to gold because it represents stability. Central banks understand that perception matters as much as actual value. By holding gold, they signal confidence and prudence, which in turn strengthens trust in their currencies. Rising gold purchases by central banks indicate a warning about potential instability in fiat currencies. Individuals holding only cash or digital currency may find themselves exposed to inflation, currency devaluation, or economic shocks. Investing in gold becomes not just an opportunity, but a form of insurance. While gold itself does not generate interest or dividends, its preservation of wealth can be critical when paper currencies lose purchasing power. Finally, there's the digital dimension. While cryptocurrencies have gained attention as alternatives to traditional money, central banks remain cautious. Gold is time-tested. Digital currencies are not. By hoarding gold, central banks ensure that even if digital or fiat systems fail, there is an underlying, universally accepted store of value. In conclusion, central banks are hoarding gold because it offers security, stability, and strategic leverage. It is a hedge against debt, inflation, currency wars, and geopolitical uncertainty. For individuals, understanding this trend is crucial. Gold is more than an investment. It is a signal about the health and trajectory of the global financial system. Watching central bank behavior offers vital insights into what lies ahead and how to protect personal wealth in an increasingly unstable world. Now, I would love to hear your thoughts. Leave a comment below. Do you agree with this? What is your take on why central banks are hoarding gold? Your perspective really matters to us and helps shape the future of this channel.